Okay guys, welcome to today's video. um so guys, I'm too strong, right? So I'm too strong, so you might not get the normal smart tech energy, right? In my previous videos, in this video, right? I've been too strong for a while now, but we keep pushing. Okay, so this topic is actually a very interesting topics, right? It's very interesting. I think would make it to be like two parts. Maybe this will be part one, we have part two. So range bound market is in SMC. So it's just teaching you how to trade a consolidation, right? When market is in a range. Now you, of course, you will agree with me that out there a lot of traders say, oh, once you see accumulation, once you see market is consolidating, right, you stay away from the market, right? But there's actually a way that you can also use that, especially, right, emphasis on this, especially if the range, right, or that particular consolidation, right, it's in higher time frame. Of course, I don't need to, do I need to start explaining what a range means? Ranging market, remember when I taught you ranging market, when market is not in an uptrend rather, or in a downtrend. And this usually happens maybe when market makes an impulsive move from the downside. A lot of, like, market has been in a series of uptrend, then after a while it slows down to what, accumulate, before market maker decides if they want to distribute to the downside or they want to continue the trend, right? Okay, of course we catch good trades when market is in an uptrend or when market is in a downtrend, but in SMC there's also way we can trade a ranging market, especially if market is ranging on what, higher time frame. Maybe you see that range on a daily time frame, or it's clearly on the weekly time frame. So it will be, as a day trader, it will be so, and especially if that's happening in your favorite pair, right? Except those who have that patient, but we know that it's not that easy to control the emotions. I know we say be patient, but it's not easy to control one's emotion. You cannot even control your emotions, you can only manage them, right? You can manage them a bit, you know yourself. Right, so it's better to state the truth rather. Nah, nobody has a stone cold heart. Whenever it comes to the market, you must feel those emotions. You feel losses sometimes, you feel joy when you make wins. It definitely comes, so you can only just control or manage the emotions a little bit, right? Okay, so now when market is ranging, right, it's very tricky, because at that stage there will be a lot of manipulations, right? It means, since market is ranging, market is what, building liquidity on the top side and on the bottom side. So that tells you that there will be a lot of structures on the lower time frame that would be manipulative moves to take you out. But what can help you is basically the concept of what, liquidity, and the concept of what, support and resistance, right? Helps you. Now once you identify a ranging market, the first thing you want to do is to identify the distance of the range. So of course you see different moves. It will not be as straight as this. We'll get to the chart. Not be as straight as this. So one thing you want to do is to identify that particular key level where market is always rejecting from. Of course, I've taught you guys how to do this, right, on earlier videos. Oh my god, yeah, this body is banging. Okay, now all you first thing you need to now understand that, especially when market has created this touch two times, right, you have a rejection from this upper resistance region, market pulls into the support, rejected, coming back again, and is rejecting, right? So how do you now catch the opportunity? You would not you must not catch every move in the range, but you can catch beautiful moves if you are patient enough, right? You know that markets has rejected 1 2 1 and it's coming back, right? You will not just rush in. There will be definitely forms of confirmations, right? One confirmation is the rejection when market bounce into this key level, or the rejection it forms, or the best way I love to enter is when it even takes out a particular previous low. Then market takes it out, then shifts. I know that, oh, market is coming to this support. No matter how greedy I am, once I enter the trade from this level, I don't need to be expecting it is now my own trade that will want to break this range. No, it must not be my trade. I must not catch the trade that breaks the range, right? All I want to do is to catch a beautiful trade from here, and when it's getting closer towards the resistant region, I want to take profit, and I'm out waiting for next market reaction. If market tries to break and rejects, right, creates that pullback again, same thing, I would enter again, right? Take my short trade 1:4, 1:3, and target this level, then I'm out. Now you are trading within the range, nothing outside. Why? Because market can decide now to break after a bounce from this region, right? After maybe a sweep of liquidity from this region, market can decide to just come here and take out the range and with a little bit of pullback and continue moving to the downside. Of course, if you catch a move from here to this level, that will be enough for you, right? Then when market confirms the break, right? But what some people will do, they'll be like, oh, is this one, this particular trade they enter is the one for sure that is going to break the range. Then what happens? Market comes. Once you take the trade, market aggressively comes, taps into this region and rejects back to your stop loss or break even. Then you're now, I don't know, I would have closed the trade. I would have closed the trade, right? You see that happen lots of time on charts, right? Now this is the daily time frame. You can see a particular form of range here, right? This is ETH. It happens ETH, BTC. You see those, any pair, right? You would see that at this particular region, imagine this is a daily time frame. So if you calculate the amount of days that the market is just doing this move, right? Sunday the 11th till all the way from where till Sunday the 22nd of June. So from May to June, market was just in a funny range. So what do we do since we know there is no breakout structure to the upside, this and that on this particular move? What do we do? How do we trade it, right? This is where you will now be focused. As long as you have identified that, oh, if market comes to this region, there's always a form of rejection. Market is coming to this guy, there's always a form. You can catch beautiful trades on smaller time frames, 15 minutes time frame, 5 minutes time frame. We have seen the one on I think on BTC, right? There was one we actually traded. I think that was when the earlier part where we started this challenge, there was a particular form of range we traded, right? When we started this challenge and market was in a bit of a range, this particular range, right? We caught beautiful trades, right? Just following market throughout this range. You can see how many days market was doing this. So to be able to identify the region of this, we were able to catch multiple, and I think I was doing the analysis, right? If you watch my video from the beginning, you'll see that this from July, right? July, August, we were killing all these trades on this particular range. If you go to smaller time frame, you backtest this, you're gonna see it, and that will be on the next video, because like I said, I'll divide this into two parts. I'm too strong, right? But you can study now. Or if, let me teach you this, if you want to be able to trade this pattern, it's not by chance. Most of you as traders, you think some of these moves professional traders catch are just by chance. No, they are based on what has been repeating. It's a repetition. Now I've traded this very well, right? Why was I confident to enter moves on these trades? If you check my X page, 2 to July, you see some beautiful setup. I call them juju setups. 3 moves, 4 moves, exactly what the market played out, right? Why? Because I understood this particular concept. Sometimes you're like, this market should stop even pumping or stop dumping. It should just rest and be trading the range, because you enjoy trades, right? If it's now trading a bigger range like this one, beautiful moves, this particular range, beautiful moves. Once you understand what market is doing on higher time frame, you know that, oh, market rejects from here, it's coming back to this place, there'll be a rejection. I want to look for liquidity, I want to see market structure shift on lower time frames, then I'll be able to enter good trades. Now they are not just based on I caught this move based on chance. No, based on experience, based on studies, what you have studied, right? You can never be able to identify this if you don't study. Now Smartech has identified a particular range. What do you need to do? I want to go to my chart and start drawing this range on the daily time frame, on the weekly time frame, right? You can start clearly from the daily time frame. Don't want to get confused. Just go to daily time frame, right? So you see that range clearly. Then once you draw your square on that range, you go to lower time frame and due diligence. Of course, it has played out. You are back testing. You study the patterns, how market is as moving, the form of liquidity you see. You know your every SMC. You're going to follow it to the core, right? You would see that this thing, it would just be like when I was trading this particular it was as if it's scripted. It was as if the moves around here were scripted. Everything, 4 hours imbalance was there. I identified the range. I was like, these moves are scripted, right? It's one of my favorite. Look at this from the range now, and I'm identifying liquidity zones where market is creating those forms of liquidity. I'm identifying them. 4 hours imbalance 1, another 4 hour imbalance 2. So I know that if market gets to one particular form of imbalance, I see a rejection. If market taps another one, I see a rejection. On this particular range, I knew that market would pull because there's a form of imbalance here again on this range. So those were my key levels. So immediately market buys from here, get to this place, I close, take a short entry from this place, coming back to this range, I'm out. If market pulls up, creates any form of SMC setup on smaller time frame, so as far as within the range, I'll take it, and it's beautiful, right? So in my next video, I'll be explaining. We caught all these moves. If you were following me from day one of this challenge, you would see that we caught all these moves from this one to this one when the market went higher to take out this liquidity here before dropping that. We caught every delicious delicious moves there. So but some traders will say, no, don't trade in consolidating market. You can actually beautifully catch trades, but you must know what you're doing. If you don't know what you're doing, you'll be taken out. You'll be longing and market will just start shorting. You'll be shorting and market will just start longing, and you'll be complaining that this market is so manipulative. No, manipulation is actually part of the game. In fact, it's what makes trading interesting, right? It's what makes it interesting. I'm not saying you will not lose some trade. Definitely you lose trade because market does not behave the same way every time, right? But it repeats most of its characters, right? That's why we trade them, and we have a particular way we trade them. Okay, so that'll be all for today. We'll continue on the next video, right? We'll continue going to lower time frame to see how we can catch those moves, right? Identifying the range on the higher time frame, going to lower time frame to see how we can catch those moves, right? We'll be talking about that, right? So that'll be all for today, guys. See you guys on the next one. Hope you learned something new. Study. Whatever you learned, study. If you don't study, if you just watch this video as if you're watching a movie, you will not create that impact. Smartech talked about range bound markets. I want to write it down on my jotter. If I don't have time, I want to set a date, a notification that I need to study range bound markets. You might be lucky when you're even studying range bound market, the same thing is happening in the market. You catch good moves, you make money. This is how to study, right? This is how you study personally to make your thing yourself. But if you just feel like it's a game of luck, nah. Nah, it's not. Crypto is not a game of luck. Nah. Okay? So thank you very much, guys.